Welcome to the Daily Thesis. From the market chaos, your deep dive into the week's pivotal shifts in markets and society. Alphabet beat forecasts with strong first quarter search ad revenue. Sales excluding partner payouts reached $76.5 billion, topping expectations. Net income hit $2.81 per share, crushing predictions. Shares climbed over 6% in after-hours trading. Ad demand remains resilient despite competition from generative AI chatbots. Google invests heavily in AI infrastructure, research, and talent. Its AI overviews in search deliver mixed results and feedback. Website publishers worry traffic declines as AI answers surface first. Alphabet must sustain revenue while funding costly innovations. Successful quarter boosts confidence but raises stakes for continued performance. Next up, Intel battles weak demand and prepares deep cost cuts. Intel issued weaker second quarter guidance today, unnerving shareholders. Revenue outlook of $11.2-12.4 billion missed. Analyst consensus widely. Shares dropped over 6% in late trading. New CEO Lip-Bu Tan unveiled aggressive cost reductions and layoffs. Operating expenses targeted at $17 billion this year, $16 billion in 26. Analysts fear demand surge was pre-tariff stocking rather than recovery. Intel trails rivals in booming AI chip market leadership. Gross margins linger near 40%, far below historic highs. Management promises sharper product focus and possible asset divestitures. Turnaround timeline remains uncertain, leaving investors cautiously skeptical. Meanwhile, bond markets reacted to fresh hints of earlier rate cuts. Treasury yields slid after officials revived chances for June cuts. Two-year note yield fell 8 basis points to 3.79% today. Five-year bonds dropped nearly 10 basis points, deepening inversion. Cleveland Fed President signaled action once data clearly weakens. Futures price roughly 60%. Probability of June easing. Traders anticipate about 84 basis points total cuts this year. Officials still stress patience but acknowledge tariff risks to growth. Strong jobless claims highlight resilient labor market despite uncertainty. 7-year auction cleared at lowest yield since September, showing demand. Investors juggle slowing indicators against inflation. Fears from new tariffs. Turning to diplomacy, Washington and Beijing exchanged conflicting messages on trade. Trump insisted fresh talks with China occurred Thursday morning. Beijing quickly denied negotiations and demanded tariff removal first. Divergent statements underscore deep mistrust between the two capitals. Chinese officials want respect and a clear US counterpart before engaging. Trump floated tariff cuts, yet simultaneously criticized Chinese economic conduct. Beijing argues current 145% duties are provocations, not pressure. Trade strain bleeds into military exchanges and fentanyl accusations. Observers expect prolonged standoff to dampen growth prospects globally. Investors watch Politburo meeting for possible stimulus signals amid uncertainty. Both governments face domestic pressures as tariff consequences mount. On a related note, consumer brands warn everyday goods may soon cost more. P&G, Unilever and Nestle say tariffs will raise household prices. Diapers, snacks and soaps are among items facing higher tax. P&G estimates levies could add up to $1.5 billion yearly costs. Company plans price increases averaging 1 to 2% globally. Unilever and Nestle already lifted prices, citing commodity and tariff pressures. PepsiCo offers smaller packages and budget lines to retain shoppers. Ford and other automakers indicate coming vehicle price hikes without relief. Economists warn tariff inflation could curb spending and threaten growth. Federal Reserve monitors price pressures, debating persistence versus temporary. If you enjoyed this video, Hit like, tap subscribe, and ring the bell to never miss our next market tale. Until tomorrow, watch the charts and keep your stories in motion.